Good evening. This is Tom Alexander. It is Sunday, December 29th. This is the last weekend update of 2024. We are heading into the last few days of the year 2024, heading into 2025. As you are probably well aware, volume is going to be very light. You really can't trust anything that happens between now and probably into week after next, frankly. I wasn't going to do an update, but I decided, well, no, I'll do an update. I'll at least tell you what I know, which right now is not a whole lot. We are, and I'm going to show you charts in just a minute, but I want to wish all of you a very Merry Christmas. I want to wish you all a very Happy New Year. I think 2025 is going to be an extraordinary year to trade. The reason I believe that is that I think volatility is going to pick up. Uh, there is an overwhelming assumption right now that the markets are going to be super bullish again because of a Trump effect and all this. And if you think you can trade politics, let me warn you, good luck. And that's not a value statement on who's elected or who's not elected, but I promise you, don't make assumptions about what the market's going to do based on who is in office or which party is in office because that they're separate issues altogether. So don't make that mistake. Uh, all right, let's just take a look at the charts. By the way, if you find value in this, please subscribe, please like, please make comments. All of these things help with driving the algorithm, et cetera, in this crazy world we're in. Let's see. Okay. All right. Looking at, all right, here are the four primary U.S. trading indices, the cash markets. Now, I'm not gonna write a report tonight because I don't feel like it, frankly. It's again the holidays. You guys can look at the levels that you see on my screen here. This is the SPX right here. This is the NDX, the Dow, and then the Russell. And we're really between levels of 2 degrees. We are a long way away from a new high in the Russell and the Dow, not so much in the SPX and the NDX. You can see we have this large disparity in terms of where we are relative to recent all-time highs in the four and actually five if you count the New York Composite. So there are numerous divergences. It's quite possible that we would trade to a new high in the SPX or NDX and not in the Dow, the Russell. We could trade straight back down from here. We could have segued from a bull market into a bear market. All of these things are on the plate now because we had this decline and then we had this ferocious bungee jump back up into the highs last week. Then the decline that stopped roughly at the midpoint of the retracement level in the SPX and NDX. And here we are. We're in basically the middle of nowhere. So, you know, my strategy here from a trading perspective is just be patient. They're going to be, again, they're going to be extraordinary opportunities. We're nowhere near an extreme, an upper extreme or a lower extreme. The best trades always occur at the extremes in a given time frame. We're not there. So be patient. Uh, let's just take a quick glance at the internals, which are not going to be particularly meaningful for all the reasons that the price structure is not meaningful. Now, the 10-day moving average, and I talked about this, you know, last week or a week and a half ago, whenever this, right before this occurred, because the moving average of the 10-day moving average of NYSE advancing issues had reached a level that was quite extreme to the downside, and from where significant lows have formed. This could still be a very significant low. Again, there's just no way to know yet. If so, what you'll see soon is this market, the SPX in particular, the SPX and probably the NDX at a minimum will turn around and make new all-time highs. Now, if we have segued into a bear market, then this will be stickier to the lower half of its typical range to the downside. And you could even see lower lows or this low tested. But again, I'm getting into speculation there. We'll know in the fullness of time. And if you can see from all my waffling around, there's just no way to know right now. I mean, it's just a seasonally time of year where typically things are positive, but also you really can't trust anything that happens. No doubt there will be all sorts of machinations after the first of the year with institutions trying to guess what new policies are going to come out of this administration and get in front of that. So, and that's I'm not going to try and guess that, but the reality is that when volume picks up and the big money starts moving things around, then we'll get a better idea about direction. Right now, guys, it's just a coin flip. Uh, Volatility spiked up very much, and then it cratered, and then it spiked up a little bit. So again, this is going to be, a guess. Unless we have some sort of exogenous event, my guess is the markets are more likely than not to be calm and probably stay inside the range here. This recent between this spike low and the panic bungee jump high that we saw at the end of last week. So that's where we are. There is just, it's just an uncertain time. It's seasonally, it's a difficult time to trade because there's a lack of volume, there's a lack of conviction. Structurally, we're in the middle of nowhere in the indices. So let's all just sit back, enjoy the next 4 or 5 days, get some rest, enjoy some football, and get ready for the new year. I will have a full report out next weekend prior to the first full week in January. In the meantime, again, Happy New Year. I appreciate all of you. Speak with you again soon.